Kane leads up UpTrade's research division, a team that combines on-chain data, market structure, analysis, and industry intelligence to find high conviction opportunities across the digital asset market. The crypto market is loud, and knowing what to ignore and, well, knowing what is important, what to watch, Kane is going to show you how serious investors filter the noise and build conviction that holds when things get uncomfortable. Welcome to the stage, Kane.
Thank you for the warm welcome. Amazing. So just a quick background on myself. My name is Kane Bizzoni. I'm Head of Research and Analytics at UpTrade, also a co-founder of UpTrade Alpha, our exclusive research platform. So a little bit about my industry experience. Back in 2022, I started at Apollo Crypto. This was one of the world's first hedge funds in digital assets. I was working as an analyst there before I made a move into VC, so venture capital. And I was doing deal flow with Upside DAO, so looking at investing in the next wave of innovation in the crypto space. Fast forward to today, I have been in the market now for 8 years. I've been through 2 full cycles, 80% drawdowns, and through projects that looked amazing on paper and went to zero anyway. So tonight I wanted to talk to you guys about one thing, research. Why it's the single most important part about how you invest in this digital asset class, why it's genuinely hard to do, and why, given the current environment we are in today, it is more important now than it has been for years. So, the noise, which is the problem. Let's start with a number, 52.2 million. That is the number of tokens that are currently available to buy in the crypto market. Not 52,000, 52.2 million. And as you can see on the chart, this is vertical. On any given day, 80 to 100,000 new tokens can be entering the market. Platforms like Pump Fund, I'm not sure if many of you know it, where you can launch projects, basically let you spin up a token within seconds and at basically zero cost. So what does this actually do to the market? Firstly, liquidity or money gets scattered amongst millions of competing assets. Attention gets scattered, even genuinely good projects get lost in the noise. And your chances as an investor to randomly choose one out of these 52 million tokens are very slim. So how are you meant to win amongst all of that? That's the big question. And because the truth is, it isn't just about the token count. The information environment is just as bad. You have your Twitter or your ex-influencers who are pumping up their own bags. You've got YouTubers creating videos for views, not quality information. And you also have Telegram groups which are either euphoric or panicking, nothing in between. So it is very hard. And in these environments, the most common thing is people start to invest based off instincts and vibes. And the data shows that. Roughly 80%, I think probably today is probably 90% of crypto investors are at a net negative in their crypto journey. And the overwhelming amount of those are retail investors. Now, I don't think everyone has to be part of that majority. I think if you're part of that 5% that actually understand what you buy and why you're buying it, you are in a position to outperform the market. So what does real research actually look like? Now, it isn't watching your favorite YouTuber telling you to buy the next meme coin. What is the research that we do at UpTrade? So as I said, I've had the privilege to work at some of the biggest and world-renowned funds in digital asset investments. And I've come up with a 5-step criteria that we basically put all different tokens through. Now, number one I'd like to touch on is fundamentals first. So who are the team? What is their track record? What is the product? Is there a product market fit for this platform or project? This actual question in itself eliminates majority of tokens. Number two, token value accrual. This is my favorite because it's understanding why a token would actually go up in value. And the big question is that people don't ask, even if a project is successful, how does that token actually capture any value, or does it capture any of that value? Well, if the answer is no, then why are you risking your equity on an asset that isn't rewarding your risk? So different token value accrual methods are utility tokens, such as looking at gas staking scarcity. For Bitcoin is scarcity. We've got revenue share, buyback and burns, different things like this. Number three is tokenomics. This is something that gets overlooked just because of the complexity of it. And this is looking at the emissions, the supply schedules, the unlocks and distribution. So who owns what and when is it hitting the market? Because you'll be surprised of how many genuinely great projects there are that are actually designed to dump on you on market when it launches. Number four, deep dive with research tools. So this is something we do on a daily basis, looking at different metrics like user growth, active wallets, what is the total liquidity flowing around ecosystems. There's many different platforms you can do this with, but it is another step to try to find narratives before they go mainstream. And then finally, number five, I put less weighting on this, but it is important, social proofing. This is looking at community strength. It's looking at the sentiment, the holder growth, maybe the volume. This is good to know if something's trending in the market. So underneath all this is one benchmark, and this is Bitcoin. So if you are taking on more risk than Bitcoin by investing in altcoins or different assets, you need to be outperforming Bitcoin. Because why would you be investing outside of Bitcoin if you aren't being rewarded for that risk? So it is very important for you guys to always come back to that, because at the end of the day, Bitcoin is a benchmark because it is the safest asset in this industry, just due to the fact it is the oldest. The other thing I'd like to also note is at UpTrade, we do have a research team. We do put 200 hours per week in research, looking at the market, reading white papers, looking at where money's flowing, what wallets are doing at 2 a.m., stuff that you guys don't really have time to do. So it is important for you guys to also be able to lean on the experts in the field. So where are we right now? Bitcoin currently sits around $63,000, I can't remember, maybe $64,000, which is around 50% below its all-time high in October last year. ETF outflows are accelerating. Fear and greed index is currently at extreme fear. Sentiment is basically on the floor, and everyone who was investing in crypto 6 months ago are now saying it is a scam or it's going to zero. So there is a very, very big shift in people's perspective when it comes to just the volatility of this asset class. But here's the thing. When extreme fear enters the market, this is where the noise becomes the loudest. And this is where research matters the most. Because looking at our research, from the research perspective, Bitcoin has entered a zone of a lot of liquidity, around the $55,000 to $60,000 zone. In 2024 and 2021, there has been historically a lot of buying pressure at these prices. It also has had a lot of long-term holders, or what we call whales, accumulating more Bitcoin at these prices. we also see public companies, strategy, MicroStrategy, are continuing to buy more Bitcoin. Wall Street are looking to innovate with blockchain. These are all big players who are still very, very much engaged in the industry. So does that mean you should buy everything tomorrow? No, obviously not. If you guys, all of you guys have your own strategies, your own positioning, your own risk appetite. So I'm not here to tell you to buy Bitcoin or anything today. But there is one thing I want to talk about, and that is the people who got hurt the worst in the last 6 months weren't the ones who were holding through volatility. They were the ones who were buying because someone said so, and they didn't know what they were buying or why they were buying it, and they ended up selling it for the same reason. So quickly, I know a lot of people in the crowd are probably thinking, okay, everyone claims to be an expert. What are the results? And that's fair enough. So just from our research alone, we have been able to call a few really good runners in the previous few years. So a few I will quickly mention. Back in 2024, end of 2024, when Hyperliquid first entered the market, we did do a report on this when it was sitting around $9. When you look at today's price, it is up 610% and is actually one of the only tokens that is actually above or actually reaching all-time highs today. Deepbook, another big token that entered the market in the latter half of 2024. We actually were talking about this and put a research report about this token in the Sui ecosystem prior to it launching. It ended up running 30x from that. We also have Grift, which was also an AI agent narrative play that went 17x in 40 days after doing another narrative report on these. And then Sui, which is, again, one that did extremely well in 2025 and ran up 900% after doing our big report on that. And I know it's very easy to bring up past years because right now is a bit bearish, but in 2026 alone, while Bitcoin is down significantly and the broader altcoin market is down as well, we have Morpho that is up 85% year to date after we interviewed the team. We also have Lighter, which is up 88% after we released a rotation thesis report on this token. We also have Cards up 185% in 1 month, near up 82% in Q1, after our Q1 report we released on it. And just as important as the ones we have backed are the ones that we didn't. One of our core theses throughout the year has been that there has been a divergence between altcoins. On one hand, we have the ones that are revenue sharing, revenue generating, and actually accruing value. On the other hand, we've got governance and speculation tokens that are slowly trending to zero, and that gap is just widening. We were also proud to be awarded the best crypto research platform in 2026 at the Paris Blockchain Week. So the investors who actually do good or are successful in the long run aren't the ones who are the most aggressive or the most active. They're the ones who are the most informed. They're the ones who actually understand what they're buying and why, and they also have the support to calmly look at the opportunities when the market presents them. That's usually when everyone else is scared, to be honest. So if you're used to just trading on emotions or trading on gut instincts or your own judgment, that is completely fine and completely normal. A lot of people do that to begin with. But there's a few questions I wanted to leave with you tonight. Number one would be, how would my last 6 months looked if I had proper research? What would I have bought? What would I have maybe never touched? Because these are the questions worth answering before the next cycle. Thank you.